Hello and welcome to day number 116 of our Travel Trader series, and today is the weekend, so I want to use this to talk a little bit about good trades versus bad trades, and why this is something where many people struggle with, especially new traders, because they kind of completely get it wrong when they look at their trades. So in general, most people think that a trade where you make money is a good trade and a trade where you lose money is a bad trade. However, that is one of the fastest way that I've seen for many traders to ruin their accounts. And here's the reason why. Many people sometimes go into a market and they think they have a feeling about something going up or going down, and they put some money down, do a trade actually, and the worst thing that can happen is that they actually are successful with it, because that gives them a feeling that, okay, I had some gut feeling, I put some money in, I was right, and therefore the next gut feeling comes, they do it again and again and again. And here's the problem with it, because if it works in the beginning, there's no system behind it, there's nothing to prove, and sooner or later your gut feeling will be dead wrong. And what happens is that many people, especially if they did it like 2 or 3 times, they were really lucky, and it's like flipping a coin. If many people flip a coin often enough, like there will be people winning again and again and again and again, like 5 times, 10 times, even up to 20 times. But sooner or later they will realize that it was just kind of luck, and that they were making money by accident. And that's one of the most dangerous things or traps where you as a trader can go into. So that's why I love to define trades, good trades and bad trades, a little bit different. So for me, it's not about whether a trade makes money or doesn't make money. That doesn't define whether it's a good trade or a bad trade for me. And the reason is because sooner or later, when you trade with gut feeling and your gut feeling gets it wrong, people put up their risk. So usually these people don't have risk management as well, and therefore they might be lucky a bit, make some money, and then they crash down again. And the worst thing is that they then can't stop, and they borrow some money or they get some money somewhere else, and they do the same again, but now there's no winning streak but a losing streak, and then they lose more than they actually had. And I've seen it quite a lot with many traders, even with experienced ones, if they get into the trap that for some reason they think that what they think is a system, but it's actually just their gut feeling, and they keep on trading it. So for me, a good trade is every trade where I stick to my own rules, and a bad trade is a trade where I deviate from my rules. And I don't care as much whether I make money or not in a single trade, because I know from my research that if I follow a certain thing in a certain system, that after a time I will make a lot of money. And you realize that when we started our mentoring portfolio, we had different rules obviously for different types of trades, whether we are trading during the day, whether we are trading long term, whether we are trading some triangles or some breakouts or whatever it is. Now we have different rules for that, but the key point is to always stick to these rules, because we know that if you have a look at our strategy and we are following that strategy, we on average will be successful 65% of all the time, or whatever the number is. It depends a little bit on, sometimes it might be 70%, 80%, sometimes it's just 55%. And it doesn't really matter too much, because first of all we use money management to make sure that we only have small losses but big winners, and if we win a multiple like 2, 3, 4, 5 times of what we would lose, even in a 50-50 scenario, we would be well off. And if you look at our mentoring portfolio starting at 20,000, now being at more than 70,000, we did really well for the few months that we were trading. And again, it's not my main portfolio, so it's like something I do next to, let's say, the real trading. So you can imagine that these principles and these systems work really well. The problem is if you deviate from that system, that's a bad trade. And the worst thing that can happen, as I said before, if you deviate from your system, and you make money, because now you think, oh, you've done something right, and you psychologically in your brain get rewarded for doing the wrong thing. And if you do that often enough, and it happens like 2, 3, 4, 5 times, now you feel that every time you do something wrong, you get rewarded. So the wrong behavior becomes your standard behavior, and that's usually when people crash their accounts very, very soon. So I would invite you to make a difference like I do in your trading as well. So from now on, I would say that good trades are not the ones that make money, and bad trades are the ones that lose money. But good trades are now the trades where you stick through your system, whether it made money or whether it didn't make money. And the bad trades are where you deviated from it. And if you avoid all these bad trades and you stick to your system, you will automatically end up making money, because you have all that research and all the probabilities in your favor, and therefore you can't help after a time, if you trade often enough, that you end up making a lot of money. The only thing that you're now missing, apart from a little bit of discipline, is that you stick to some money management rules, which is something that we will cover in one of our next weekend sessions. So we will get you there, that you have actually both. So from now on, I hope that you only do good trades, and good trades, the ones that actually are exactly what your system says to do and nothing else. And the great thing about it actually is that even if you have a trade and it loses, I will do the same thing over and over again, because I know that eventually after 100 trades I will have many more winners than losers, and because of the money management, every time I win I will earn a multiple of what I lose. Therefore I can't help making money, and that's a good thing. So sometimes, of course, it feels quite bad if you did everything right and you lost money, and on the other side you did everything wrong and you won some money. That gives you kind of a bad feeling. That's why it's so important to be disciplined. There are not too many rules in trading. It's just about follow your system, have a great money management, and don't deviate from your system. Make sure that you have small losses and big winners, and that's basically everything you need to know about trading, and you will be successful. So there's only a few rules, but these are essential. So from now on, good trades, the ones where you follow the rules. Bad trades, we don't know, because we don't do bad trades. So everything from now on should be a good trade for you. Thank you very much for watching. I wish you a great evening, and hope this was helpful for you to assess your trades in the future. Also, if you use a trading journal, which I would highly recommend for everyone, you can go back and you see exactly where you stick to your rules, where you deviated. So eliminate the deviations, make sure you stick to the good ones. And that's my message for today. Thank you very much for watching. I see you again tomorrow for some more input. Thank you and goodbye.